Well, hello everybody, I'm LA Little and this is your weekly NeoTA wrap. We take a look at these markets. We do it from a neoclassical perspective each time, asking ourselves what happened last week and what does it tell us about the coming ones. And I do this show every Sunday night, broadcast at or before 10 o'clock Eastern Time, archived on YouTube under the channel LA Little. And as far as what happened last week, big spike up, especially in the NASDAQ. You had Google, you had Netflix, you had eBay, some of the other names, big names moving the market. It's concentrated in the big cap stocks though, and that is a problem if it continues to be that way. Right now, they're riding on the coattails of those big caps, and you got two more this week. On Tuesday, you got Apple and Microsoft. Those are going to be the big numbers this week with respect to what this market does. So that's kind of a quick wrap. You got like 100 S&P names going to report this week. You've got half the Dow going to report. This is the big week to start off the earnings season. You had a few big names last week, financials primarily, but then a few of the big cap tech stocks. The only couple that really disappointed, Sherman-Williams and Intel. Outside of that, it was all gravy and it was all up. Looking at the actual indexes, let's start with the S&P 500, and let's start here. Let me grab that. So bear with me just a second. All right, here we go. Well, here's the S&P. So big spike up off the lows, right? Straight up move, and we saw this across all the indexes here. We also saw it in Europe. That spike higher, takes the indexes up to the top of the range with respect to the S&P 500, and that move is a big move, right? What is that, about 4% probably straight off the bottom. So that's the S&P 500. If you look over at the weekly chart also taking it back to the top of the range, and so now inside that top of the range, that's where it sits, and it's going to try to push higher. So the thing to note here is that, on the weekly, on the daily as well, you're in the range is here, you're extending right up to the top of the range, you're going to try to push by it. Now, that's in contrast to what's already happened on the NASDAQ, right? The NASDAQ has already gotten outside the range. You see the breakout here. It was up to the top of it on Thursday, it breaks out on Friday, and you can see the breakout on the weekly. That's multiple breaks, multiple time frames. That usually is a good sign, can take you higher, and so you have exactly what you need to try to take this thing higher. Of course, the thing is that it has to keep pushing if in fact that's going to happen. NDX looks the same, just stronger, and that's because all the move is concentrated in those big cap technology stocks. And then moving to the Russell, you've got a different picture, and that is that the Russell, as it came into this big bar and onto the top of the breakdown bar, it got stuck. And it got stuck right there at that level, couldn't get over it. Now the good thing is that it's consolidated there. It hasn't moved up, hasn't moved down, just sideways. If you get a farther move, or if you see rotation, now you've got your setup to actually get an ABCD structure higher to take it to new highs. So the Russell is set up pretty well. If you look at it on the weekly, it was doing a retest regenerate off that prior high. It's holding that retest regen so far. If it can press above it, right, then you can get a continuation move to the upside. That's the indexes. If you look over at the world markets, the world markets also had a good week, in particular in France and Germany, so in the European names, and that was off of what took place with the Greek can kick, if you will. V-shaped reversal back to the highs, and if you look at it on a weekly, right, you're coming back to the top of the range. And so, this had pressed lower. It had, if you want to do the classical stuff, you had this kind of a wedge type formation going to the downside. Now you break out to the top, you're back over it, you're coming back into the bar that has the volume. This is where you would expect that it's going to have problems if it's going to. And, to me, it's a range trade, right? We've had a range. The range continues to be in effect. This test down came into this big bar, it held, right? That's all good stuff. That's exactly what you'd want to see. And so now you're back at the top of the range, and if you divide that range up into about half, right? You're right up in the top half of it, trying to test into the top. Can it get a little pullback? Sure, they can certainly get that. You can see it here. You can see it in the German DAX. You know, both of them had nice big moves up. They get above their swing point highs. They transition their trends. They don't have a lot of volume. They can pull back. They can pull back into this gap area and still be quite bullish, actually. As a matter of fact, if you drew it in and you said, okay, what happens if it does that? And I'm looking to make sure, yeah, if it does that, if it were to come back at here, what is it going to do? It's going to set up an ABCD structure to take it back to the top and potentially over the top. So I can't look at these markets and feel bad about the way they're set up. We had the test, we had the pushes, we had the pressure to the downside, and they were unable to break it down. If you look at the Shanghai, if you go to Asia, you know, Shanghai actually has a little ABCD structure potentially forming here to try to take it over that retest regen that's bearish, and I'm talking about this bar here. So on a daily basis, that would be the target. If it gets over it, what would that do? Well, in my mind, that would say, hey, this is a sideways trend. You've actually got a range trade developing here, and that's what we were talking about would probably take place. You had big pressure on the downside, volume coming back into the swing point high right there, but what did it do? That was a retest regen, right? You hadn't had a test on this breakout since there. That's a high probability buy. Comes into it, has volume, spikes back up. It's probably going to come back up now and try to test into this region on the bearish side. In other words, come back up. That ABCD structure we were just showing on the daily chart would take you back into that level. And then what would that do? Potentially set up some sort of a test to come back and test into here and try to break it down. So that's the way Shanghai is set up. Remember, Shanghai had 150% run to the north. It can certainly come back deeper. It can come back quite a bit deeper, actually, and still be bullish on a long-term time frame. Don't know that it's going to do that, but at the same time, if you're playing these kinds of markets, you have to recognize that you can get huge volatility, and if you're not careful, you just get shaken out of them. And it's very hard to stay in a market that just goes down 35 straight away, 35%, right? That if you bought anywhere up in here, it's very difficult to stay with something that long. Hong Kong looks about the same, not much difference there. Let's see what Korea looks like. And Korea, a lot of volume over the top. That one actually compressed a little bit higher. And that one also had a pretty good decline. The Nikkei actually had a pretty good run to the upside and is still running to the upside, and that's with a high volume low. Now, you had high volume lows all across Asia. You had it in Hong Kong, you had it in Shanghai, you had it in the Nikkei. All of them have high volume highs, high volume lows. So at the same time, even though these things are pressing higher, you know in the back of your mind that these can get tested again. Now, they don't always get tested immediately. It could take 2 or 3 months before the test comes, but there's certainly the possibility and the potential to come back down there and actually test it. So if you think these are just going to take off and run to the moon again, that's probably not likely. But Nikkei probably has the best chance of all of them because it's devaluing its currency faster than you and I can speak. You know, outside of that, you know, if we're looking at Hong Kong and Shanghai, I don't think you're going to see those make, you know, fresh runs to new highs and keep going. They're going to range trade, and this one probably is going to do the same. If we turn our attention to some of the other areas that we don't talk about that much, for example, if we go to the sectors, you know, one of the things you're seeing, and I'm going to put this on a weekly, so let me take the daily out of the way and just put the weekly up so we can look at that. Look at the biotech, for example, on a weekly here. You've got a spike high over, you know, this previous high, so you've got continuation going here. Nothing wrong with that. Now, look at the SOX, for example. The SOX, and let's grab the SOX. If we look at it, we've got a different situation, right? Here, we actually have the opposite taking place, and that is that we have a continuation of a decline that's taking place, and it just broke 2 swing point lows this past week, and it had big volume on it. So, you know, tale of two cities, so to speak, a tale of two markets. You've got financials. If we go to those, you've got those pushing up. You've got the biotechs pushing up, you've got the semiconductors pressing down, you've got the transports pressing down, the industrials can't get started. I mean, if you just go around the horn here of what's happening, you know, consumer durables are pressing up to new highs and so forth. So you got some strong sectors, you got some weak sectors. They're balancing each other out, but the main thing right now is technology and financials are moving higher. Those are the two biggest weightings in the S&P 500. That tells me that more than likely we're going to see that S&P 500. If we go back over there and pull it up, we're probably going to see that S&P 500 push up, make new highs before this leg is done, and then set a new range to the top side. That's probably the way this thing's going to play out. It's been going sideways for a long time, right? You did sideways here, and before that you did sideways as well. You really had that spike low in October last year. So what's to keep it from doing the same sort of thing, maybe another one up to that level, right? And then you kind of get something like this going on. Looks to me like that's probably what's in the cards, and we're not going to get some huge breakout that just keeps taking us higher, but instead of push, and then eventually another pullback and another range developing. That looks to be the way it's going to play out to me, and I'll probably leave it at that for tonight with respect to the indexes. I'll move over and tackle gold. I did see gold fade pretty badly this last week, if I can pull that up. And a lot of that has to do with the strength that's coming back into the dollar. Now what's happening with the earnings is that we're getting good earnings, and those earnings are pushing this market higher, and that's because the dollar actually declined most of that that second quarter. The pressure wasn't there. So if you go back to say about May, I'm on the weekly here, if you go back to this price point, which was June, you know, from actually I'll go back to April, which was the last earnings. April forward, right, this thing hasn't been able to actually push higher. So the dollar, the edge that you saw with this big push up the last couple of quarters last year, right, which really started to affect the earnings, that leveled out and we started range trading this thing. Now at some point this is probably going to take off again, and that's going to hurt the market and it's going to hurt the equities. But right now it's a range trade, and as long as it stays a range trade, then equities can do okay. So that part of it's good, but the fact that the dollar is holding and looks like it's going to go higher, and the fact that commodities in general are selling down, you're starting to see breakdowns. Gold breaks down again, breaks down across two swing point lows. Gold looks pretty tough here. It looks to me like it's going to try to go lower unless we get some sort of quick bounce back up that holds. If it doesn't, you got to think lower on gold. Well, that's it for tonight. I'll leave it at that. Have a great one. Thanks for joining me. Tell a friend, tell two. I'm LA. This is, and it was, your weekly NeoTA wrap. Have a great night. I'll see you next time.